Selling a business should be solving pain points, not creating pain points. And so in today's video, we talk about selling a business, and in the process of selling a business, solving all of the pain points that come along with the idea of selling a business, exiting your business, and finding capital. I'm Arthur Petropoulos, managing partner here at Hillview Partners. We're a middle market, lower middle market M&A and capital advisory firm. We help companies generating $1 million to $10 million a year in pre-tax earnings or EBITDA sell their companies and find capital. So in part one of this video, we want to dig into 5 major pain points when you're contemplating selling a business and how these things are resolved, or how the optimal process resolves for these different considerations. Right? Anytime we're in the process of discussing with a prospective client, with an existing client, the process of selling the business, the things that come along with selling the business, these are always the same 10 questions out of, call it, the top 15 that come up. In today's video, we'll talk about 5. In the video towards the end of the week, we'll talk about another 5, but this will give you somewhat of an FAQ as to some of those frequently asked things that come up when thinking about pursuing this path. So one of the first questions is, who would buy my company? I don't even know who would buy my company. And the answer to that is, that's our job, right? There's a whole spectrum of companies, going from publicly traded strategic companies to privately held strategic companies to private equity-backed strategic companies to private equity companies looking for portfolio companies to family offices to high net worth individuals. There's a huge spectrum, particularly in the middle market, lower middle market, of people that buy companies. And that's our job, is to know who this fits with. Who is this the missing puzzle piece for? And knowing how to get in touch with these people, how to present opportunities to these people, and how to pull through the process of evaluating if they're a bona fide interested party. So the right investment banking firm that you're going to work with is not going to put the onus on you to figure out who's going to buy the company. They're going to be able to do that. And through the combination of available databases, internal databases, some of our own AI, some of our own experience, and obviously a network that we've generated over 20 plus years, that's when you know which string is the best one to pull for which particular situation. A second question that comes up, kind of feeding off of this, is, how is someone going to value my company? What's my company worth? And so with every engagement we're contemplating and working with, we are putting together what we believe the market will value a company at. But then also a lot of that comes from, again, data, research, experience, our own internal data points, and ultimately from the dialogues with the respective interested parties of kind of pulling that through. Again, if you just go out there and say, company makes X dollars a year, what do you think about it? Someone might say, well, we'd apply a multiple of X to it, a multiple of Y to it. However, if you reach out to the party and say, this company generates this kind of EBITDA, pre-tax profit, but at the same time has access to this customer base, has these kinds of capabilities. Again, we hit the drum on this all the time, fundamentals, access, capabilities. That's when you can position it as the missing puzzle piece. That's when someone thinks about buying it in the sense of acquiring capabilities or access that they don't have versus building it from ground up, which again pushes value up. So who's going to buy my company? Well, there's lots of rocks to turn over. How are they going to value it? Well, we have to position it optimally to those parties such that they know how much it would cost if they just wanted to build it from ground up, and by avoiding all of the risk and time and resource allocation that comes with that, better calculating that value versus purely just a multiple of EBITDA. So third question, how does this even work? How does this process happen? And every firm is going to approach this differently, and many of them it's going to take a long time, and it's not a lot of certainty, and it's going to be 18 to 24 months. With our firm, it's always been a 6-month process start to finish. 3 months to offers, 3 months to a closing from a signed LOI, and that's the process we undertake with every engagement that we pursue. And that comes with building up an audience, working it back down to offers, and aggressively shepherding the diligence process therefrom. The point of it is not letting people just kick tires and hang around forever, but really separating the wheat from the chaff in a thoughtful manner and accelerating the process such that things don't languish. We say it is a proactive, not reactive exercise. And so, again, let's go through the first 3 of those questions. What we say, who would buy my company? How would they value it? And how does this even work? What we say is the right narrative to the right audience with the right process. And so the right audience is knowing who to reach out to. The right narrative is what elucidates or brings forth the best offers or the best terms. And the right process is knowing how to run that in a lockstep conveyor belt where you're not losing any time along the way. The fourth question that comes up that we've already addressed is, how long does it take? And again, this can vary wildly. We've heard of people trying to sell their businesses for 3 years and not getting any meaningful leads for it, but in every one of our exercises, a 6-month process start to finish. And again, that's part of the secret sauce here as to how we're able to facilitate that. But again, it's by being deliberate, by being proactive, by being aggressive, and by not allowing any part of the process to just be a factor of waiting. You know, we say hope is not a strategy in this business. And so we really try to push and get our yeses fast, get our nos even faster. And a fifth question, which is another meaningful part of kind of the overall evaluation from a prospective person thinking to sell a business is, what pain does this cost for me? How much time is this going to take of me? And in some situations, depending on who you use, it could be a lot of time where people say, hey, answer these 50 pages of questions. Hey, do all these videos for us, do all this marketing, do all of this work for us. But from our perspective, it's always been that this should be a turnkey exercise. This should be where we are the ones doing the heavy lift. And in pursuing it that way, it is a minimal amount of time. We always say a few hours on the front end to get us some information that allows us to put the materials together, to put that narrative together. And then again, there'll be a handful of hours kind of just before offers or just after offers, meeting or having Zoom meetings with some of the interested parties. But if in our situations, we say a 10-hour commitment to get to the letters of intent, to get to the cachet of multiple offers, that's probably where it lands. Sometimes it's less, but again, highly dependent on who you utilize, and then oftentimes that can be a very cumbersome and distracting process. In our perspective of things, you want to be sprinting through the finish line. If you're going to be selling your business, you do not want to be languishing. You don't want to have to explain why things kind of went a little bit south just before. And again, worst case scenario, if you do not ultimately sell the business and you have to go out to the market again in the future, you don't want to have to explain this kind of spaghetti line of growth in the business. And so again, what pain is it going to cause? Well, it depends who you use, but in our approach to things, it's going to be a minimal amount. And so let's recap these first 5 key questions, 5 key pain points that need to be resolved when contemplating selling a business or entering the process of doing so. It's 1, who would buy my company? That's a combination of research, of databases, of experience. 2, how would they value the company? Now, we're going to internally value a business, but at the same time, being able to, again, research databases, as well as have the actual dialogues with the interested parties to extract the real data points in real time. 3, how does the process work? Well, in some instances, it can work very poorly depending on who you're working with. But in our situation, it's the lockstep process. Let's call it 20 steps from start to finish, all happening in rapid succession between the signing of an engagement to the signing of an LOI to the closing of diligence period. And the 5th question, what pain does this cause? Again, this is going to be heavily dependent on who you work with, but in our situations, we want it to be turnkey, lots of leverage, light lift for our clients, and then we do the heavy lifting, we do the hard work, and we're able to generate the results. And so, I guess as a bonus question, and we'll get to it at the end of the next video as well, is this something that should be contemplated? Is selling your business something you should be contemplating? If you say, hey, you know what, I may want to do it now, may not want to do it now, maybe something for the future. And the idea is better to do it when you want to than when you have to. If it's something that you're contemplating now or for the future, better to get the data points, better to get the information. You can make a decision best when you are educated, when you know how much something is worth, when you know what the exercise would look like. And so if it's something of interest to talk to people about, whether it's our firm or elsewhere, one should talk about it, one should get educated, one should make the decision when things are moving in the right direction, not when that inflection point happens in the future at some point when it's not moving in the right direction. But that's the thought for today. Selling a business, solving the pain points of contemplating the exercise, and we'll continue in part B later this week. I hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. We'll see everyone next time.